The Sanders Financial, where we talk money matters because money matters.
Today, I'm going to be speaking to you about home equity lines of credit and home equity loans. I hope you find a lot of value in it, and maybe you'll take the gamble. You'll actually leverage some equity from your home. One of the things about equity, I got to tell you, it is a wealth builder. Your home is typically one of the most expensive things that you're going to buy in your lifetime, those that do acquire real estate, and you have free equity, meaning the value that is in your home that you don't have debt on. Having equity, there really is no value to it unless you put it to use. So I am an advocate of leveraging home equity lines of credit and home equity loans for the purpose of investing and expanding and growing your wealth, not for spending on lavish vehicles and boats and stuff like that. You can do that. I'm not saying you can't, but those are my own personal convictions. I choose to leverage home equity lines of credit, not loans, home equity lines of credit because they're revolving. Leverage those for emergency funds, leverage those for rehab things, furnishing homes for my Airbnbs or my midterm rentals or etc. So a lot of different things you can do. I want to make way more videos on talking. One of my favorite reasons for using a home equity line of credit compared to a home equity loan is the monthly payment obligation. If I were to have a $100,000 home equity line of credit, but I haven't used the money, guess what? There is zero monthly payment obligation. If I don't owe anything, I don't pay anything. If I were to find a piece of property, something I wanted to invest in, some type of home improvement project, and I leverage $50,000 on that $100,000 line, I could potentially look at a monthly payment of $500 for a month, as long as I owe $50,000. If I were to pay that $50,000 balance down and I've decreased it to only $20,000 remaining, I could potentially see a $200 a month monthly payment off $20,000. That's one of the reasons why I really like the home equity line of credit, because I can use the line, I can pay down the line, and the more I pay down that line, the less my monthly payment is, thus freeing up my monthly expenses are freed up. This is very beneficial for a lot of people, and I think you would find a lot of value in this as well. So like this video, please drop a comment in the chat. Let me know if you found value in this, and if there's any other topics that you would like to hear me talk about, let me know in the chat what topics you want to hear, or you can hit me up if you have my contact information, and I'll make that happen for you. Thank you. Now it's time to watch some videos on some home equity line of credit. Okay, you asked for it, so here you go. This is me, Ladarius Sanders from the Sanders Financial, where we talk money matters because money matters. Someone reached out to me and says, hey, can you please do a video describing the difference between a HELOC and a home equity loan? All right, let's break it down. A HELOC is an acronym that stands for Home Equity Line of Credit. HELOC, H-E-L-O-C. Home equity line of credit, and a home equity loan, which is just called a HEL, home equity loan, H-E-L. The difference is between the two. So a HELOC is like a credit card, right? Because it is a revolving line of credit, okay? That is what a HELOC is. A home equity loan, it's an actual loan. So the question is, what is the difference between a home equity loan and a home equity line of credit? Well, a home equity loan is something that has a start date and an end date, meaning once you start the loan, there is a date of maturity is what they call it. So if you have a 3-year loan, right, a 3-year home equity loan, that means at the end of 3 years, the loan should be paid off. You can only use it one time. Once you use it, you get the funds, you do whatever you want to with it, and then that's it. A home equity line of credit is like a credit card. You can use it, and when it's paid off, guess what? You can use it again. You can get a home equity line of credit for, let's say, $100,000, right? With a $100,000 home equity line of credit, if you use $50,000 of it, you still have another 50 available. Well, you can use that 50 at any time that you choose to, or you can pay back the 50 and then you have the full 100 available again that you can use. So it's like up and down, like a little slush fund that you can use with the home equity lines of credit. Now, what are the benefits? A lot of people leverage home equity lines of credit for home improvements, investments. You can actually use a home equity line of credit towards a down payment for a house. So how cool is that? You don't have the cash, you can leverage home equity line of credit, and then it could be the down payment for your next move. This is very advantageous if you're the type of person that you want to move into another location and you don't want to have to worry about renting somewhere else, or you can leverage your home equity line of credit from the house that you're exiting, right? That's your down payment. Once you move in, then sell the house after you fully moved in. Once you sell that home, it pays off the line of credit because that line of credit has to be what you call satisfied, right? Satisfy the loan. That is a home equity line of credit versus a home equity loan. Man, there's so much to it. There's so many ways you can leverage that to invest. Another good benefit of a home equity line of credit is taxes, right? You have the ability to save money on taxes. Well, how? Because the interest that you're paying on your home equity line of credit could be tax deductible for you, but you need to consult with a CPA. I know lots of CPAs. I know some really good CPAs, and I like to recommend them. But go with a CPA that you know and that you trust because you need to do your due diligence. But consult with a CPA, and they'll tell you how to leverage your home equity line of credit to possibly save you some money on taxes as well. I love credit unions. I'm not even gonna lie. A credit union is great because they have very competitive rates at credit unions on home equity line of credit. If a company has your mortgage, if there's a place that holds your mortgage, that may be a good place you can go and get that home equity line of credit. It is essentially a mortgage. Let's talk about that. It's a mortgage on your house. You are putting your home up at risk for leverage, okay? No one's going to give you $100,000 just because they like you, okay? They'll give you $100,000 and say, hey, you have really good credit, so they trust you. And because they trust you, they're willing to take that gamble. But they only trust you as far as you have a house. That's right, as far as you have a house. Because what that means is if you no pay, they take your house. Yes, that's right. You have to pay back what you owe, or you will have your house subject to having a lien on it, meaning you can't sell that house until you pay off that line of credit. But it's okay. You can do that. You can leverage that line of credit, like I said, towards an investment property, towards a down payment on a new home for yourself or home improvements. Just know you need to pay that back before you sell that house or negotiate that home. I'm going to do way more videos about home equity lines of credit. I think, honestly, there are a lot of great ways you can leverage, and I just can't pack all this in one video. Why? Number one, no one likes to watch a long YouTube video. Number two, because I don't want to bore you, and I'm out here in this cold weather. We can talk more in depth about loans and different strategies you can do. I'm Ladarius Sanders from the Sanders Financial, where we talk money matters because money matters. And I hope you learned something today. Please like, subscribe, share it to some people. If you love this content, that keeps me motivated. Share it with people because then I know you find value in what I'm talking about. All right. So again, that just concludes the difference between a home equity loan, right, and a home equity line of credit. Again, one you can keep using, one has a maturity date, and they're all tied to your house. Happy shopping for credit. Happy shopping for credit. Holla.
Thanks again for watching the Sanders Financial, where we talk money matters because money matters.